if you speak to people coming into the space, perhaps those that are more risk averse, they will say, well, crypto is more risky than other assets. And I think you've done a really good job of arguing, well, that's actually not the case. In fact, most people don't fully comprehend the level of risk that exists in the existing system, in pension funds or other ways that they might be allocating their capital, right?
That's right. So if people, it hasn't dawned on people that they could have lost all of their money in the banking system in 2012 in Europe. All of their money was wiped out. There's the probability of total wipeout, and we've seen it time and time again within the financial system. We've got these other risks that we don't understand, such as the debasement of money. These are risks we don't really understand. There's also confiscation risks, and we see that periodically. Basically, we're seeing it in China now. We've seen it in Russia in the past. We're all running risks. Then we've got a pension system that's underfunded. And so people don't understand that the fact that what they think is a retirement nest egg, A, is going to be worth less in real terms, and B, is not enough. We've also got the social security or state benefits system, which is underfunded, which could bankrupt governments. We've got a lot of these big existential risks. Are we getting rewarded for them? We're not getting rewarded in government bonds anymore for the risk of something bad happening, whether it's excessive inflation, whether it's a government defaulting, which almost happened in Europe. So right now, Greek government bonds are negative, but if the ECB wasn't there, they'd default and you'd lose all of your money. So Bitcoin looks riskier because it's more volatile. But what a professional does is look at the risk reward. What is the risk? Well, the risk is probably, call it 75% downside over a 2-year period. Is there a risk of it going to zero? It's almost negligible now. So let's call it a 75% downside. Well, still on average, it goes up 213%. So that's a 3-for-1 risk reward every single year. And over a 3 or 5 year time horizon, it tends to go up like 10x. And generally only with one of those drawdowns of that magnitude. It's much less risky. Also because, as you talked about before, it's actually not correlated with other stuff. So most of us have legacy pension systems and houses that we bought and other stuff. Well, how does Bitcoin fit into that? Well, it's not correlated to all of that. So it offers benefits. So if the world goes to hell in a handbasket, chances are Bitcoin's going to appreciate in price. So it's a hedge. It's how people use gold in the past as well. But this happens to be gold for the digital age. And that's a very powerful thing. It may be perceived as risky, but again, you're also looking at it through linear eyes. Just to explain to people exponentiality versus linearity. So if I take 20 linear steps across my office and into my lounge, call it 10 meters across. If I take 20 exponential steps, I go around the world like twice. That's what people can't understand. How can that be? But that's what exponentiality is. That is going to be volatile by nature, but it's going to be offset by the returns that you get.
So I think most people think that crypto is a threat to the existing financial system, to their fiat-based system, whatever it may be. So why are they ever going to allow it to happen? Putting aside to what extent can they stop it? Why do you think that they are going to positively engage with it?
Because it is a network of which they have no control over. So whether they like it or not, it's happening. And behind closed doors, of course, the ECB understands that it is supporting the entire European Union by using its balance sheet, and it's printing money to do so. And this is not a good situation, and the banks don't operate. The UK also knows that its banks are broken, they don't operate properly, and the life systems on life support, and it requires monetary printing because there are no interest rates. The Federal Reserve understands that, the Bank of Japan, everybody. They're just not going to tell you, because if they do, you'll have a loss of faith in money. So if they see the parallel financial system, these are not alien creatures. They'll go, you know what, this is pretty useful. Maybe this is the collateral for something that we can use. Maybe we can get away from the excessive leverage. Maybe it brings monetary velocity back. And the answer was very quickly, we should join it, which was central bank digital currencies. We get it. This is where it's going. And we've got a broken banking system, so central bank digital currencies allow us to maybe circumvent the banking system, be able to give money directly to people or businesses, and to get around monetary policy, which has reached the end of its limits. So then what they're doing is telling you, okay, we get this, we're going to dovetail in with it. But we as governments need to make sure, if we're going to provide you with roads and garbage collection and all of this stuff, we need to get taxes paid, because if not, we're going to go bust. As long as we can tax it, as long as we figure out there's no criminal activity going on, we're kind of okay with it. Because right now it's not big enough to matter. You know, whatever people in Bitcoin world think it is, a $1 trillion asset is noise. You know, Apple is $1 trillion. Well, more, it's 2.4 trillion now. But, you know, it's noise. When it gets to $100 trillion, yeah, okay, it's the size of the real estate market or stuff like that. And it becomes more important. The regulators are now trying to think, okay, we know this is coming. It's a network. It's growing ridiculously fast. What we need to do is try and slow it down so we can get our ducks in a row, which is how the hell do we regulate DeFi, NFTs, social tokens? How do we regulate the metaverse? All of this stuff. They have no idea, nor do any of us. Our answer is, well, just don't regulate it. But governments don't want to do that because they have to walk away from things that they have taken to be truths, which is that some people should not be allowed to invest in riskier things. But the counter argument is, but you're allowed to go to Vegas and nobody cares. That came out of probably came out of the 1930 crash. There was a lot of scams going on, as there is in the crypto space. And what the banks did was lobby to say, we should have control over how the capital gets allocated. We can't give it to the people. And the governments go, yeah, that makes total sense. These guys are all getting screwed here. You guys are sensible. What it meant for the banks is obviously a windfall gain that they control the whole system. And that's the Securities Act. If you call it a security, then basically you have to go through a bank. We need to get rid of all of that. And I think they know it. I mean, Gary Gensler's got to feel stupid in the US standing up saying, we think this is a security. They know that it's not a security. They just don't know how to make sure that people don't get screwed and they get their fair share of it, and they kind of get some ability to manage the pace of appreciation of the adoption before it gets rid of all the banks. You don't really need money centre bank. Why do you need Barclays in the UK or some bank in Ohio? You don't. All those European money centre banks, you don't need them, because with DeFi, fintech, central bank digital currencies, and Bitcoin, you've basically got a whole financial system built for you. You've got borrowing, lending, saving, collateral, transfer of payments, instantaneous. So it's there. And that's why I keep talking about this parallel financial system that's being built. That's what's going on. So regulation is only going to create more adoption. So all of the institutions, all of the investment advisors or IFAs in the UK will advise their clients to do it once they know that they can't get into trouble for recommending it. And it's as simple as that. So the more regulation that comes, the more people will get involved. We're all terrified once you go further out the risk curve what NFTs, social tokens, DeFi mean for regulators. We just don't know. BlackRock or the UK pensions is given the green light to use DeFi for yield, trillions of dollars into it, because it's got high yields right now, not that big a risk. So it will come, it will have to come slowly, because they've got to manage this whole situation, figure out how to regulate it, what should they regulate, what shouldn't they regulate. I mean, I don't think they really should stop certain types of people having access to it. I think there needs to be some warnings about the space and stuff like that. I don't know how to deal with the scams, but the scams in startups, the scams in equity businesses, the scams down the street when you get your shoes shined, the scams everywhere. We can't protect humans from themselves.